you know, maybe you'll tell me it's a myth, but there is a view out there, and I say this with all affection, given that I have two millennials as children, but there is a view that millennials are not the most financially responsible generation in American history. On the other hand, every study I've ever seen of millennials indicates that they have the same desire for home ownership as previous generations. I think the real question is, will they actually be able to act on that expressed desire or not? So, Randy, what are you seeing? You're seeing, you oversee a huge mortgage operation with lots and lots of customers across these generations. What are you seeing among millennials? Do you see that same aspiration for home ownership? And what are the things that we as an industry collectively need to do in order to fulfill that?
Millennials make up of the largest share of our membership. If you think about the demographics of active duty service members and their families, it's a lot of 20 and 30 something. So we know that part of the market very well. 60% of our purchase loan originations are first time home buyers. And that's why education is so important for us. We spend a lot of time engaging with our membership and promoting engagement by our membership back to us. Talk to us 6 months or a year before you're interested in buying a house, because we have a roadmap for you. We can tell you the key steps to follow in order to prepare yourself and put yourself in the best position. We also have a lot of unique products and services, from 100% financing to some very affordable and reasonable ARM products. So the key to millennials is get engaged, get educated early, because there are steps that you can take to put yourself on solid financial footing so that you can achieve that dream of home ownership. It does take discipline, it does take budgeting and hard work, but it can be done. And we see millennials doing it every day in our business. And I think that we'll continue to see that.
I think you're absolutely right. I also think there's a challenge with many consumers but especially younger consumers, where they don't appreciate that they don't necessarily need a 20% down payment in order to go buy a house. You certainly want them to be financially capable of buying and sustaining that home ownership, because you don't want to give loans to people who can't afford them. But they don't need to have a 20% down payment, which I think is a common misconception among a lot of people.
And that's why education is so critical, understanding what options are available to you, and also just the basics of budgeting. I think, understanding what not to put on a credit card, what you can afford from a car perspective. Taking those steps is really the most critical piece to setting yourself up for success in home buying.
I'm future predicting here, and I'm already seeing a little bit of this trend starting to scale, is that millennials where the financial piece is not the issue, meaning that, their job has not been lost. They maybe just converted to remote work, no problem, and they have been saving diligently, are now prioritizing looking for that first time home right now, because in this climate that we're living in, we realize that our home is our bunker, it is our sanctuary, and we are working and living and even, operating our children's virtual schools from home. So I think that the way millennials think about home ownership and value home ownership over spending in a big city and just, kind of putting my money down the drain in rent is going to start to change. And I think we're going to start to prioritize home ownership a little bit differently as a generation due to what we're experiencing right now.
Well, it's a really interesting observation. And the reality is that, we've got a whole lot of people who are now thinking about home in a different way. It may be that, especially with remote working, we'll see whether it ends up becoming a long-term phenomenon, but it may be that we see people migrating more and more to the suburbs and maybe even more rural areas, because they actually don't need to be in a city for their work. They could do it remotely.
I think it's going to be very interesting, even just within the next year, to see how things evolve in renting versus home ownership. I could count on all 10 of my fingers friends of mine that have flocked from New York City down to South Florida to start buying homes and moving back to South Florida due to cost of living.
So we've talked a lot about millennials. Chelsea, are we thinking enough about Gen Zers? Are they going to be different than millennials? And Should people like Randy be thinking about that next generation already?
Tim, I'm so glad you brought up Gen Zers because I've been talking about millennials for over a decade now. So we should be talking about Gen Zers so that companies are, that much more ahead of the game. However, I think millennials were the biggest transition because millennials were the first generation to really evolve with the internet. But here's the biggest difference of millennials and Gen Zers. So I always say this, Millennials are like the last generation to remember what dial-up internet sounds like. Remember that horrible noise of dial-up internet? When I talk to my brother who's 26 years old, he's like, I think I kind of remember, but I don't really remember. He's on that cusp of Gen Z millennial. So where millennials have evolved with the technology, evolved with social media, Gen Zers won't know anything else. So that's the difference when it comes to the seamless self-service solutions, thinking mobile first. Here's something we all need to acknowledge in 2020. And speaking about Gen Zers, is that what is the first screen today? It's not TV. It's not the computer, it is our mobile device. However, if you're evolving with the digital and social media times, you're already evolving for Gen Zers. The biggest difference is that Gen Zers are big social activists. They are not scared to voice their opinion. They know how to rally for change online, and they truly expect a self-service solution seamlessly, being that they truly don't know any other lifestyle.
So, Randy, in light of that, what's the future of financial services? Are there going to be branches anymore? I mean, does anybody really care about a brick and mortar environment at all? Or is everything going to be intermediated through a piece of glass or a screen, and at most, the deepest personal interaction people will have will be over the telephone?
We think that there will be branches in the future. They're not going to look the way branches look today. We believe they're going to be smaller. They're going to be fewer people inside. They're going to be more educational in nature. They're going to be set up with a lot of these digital services and devices, but with someone there to help navigate and tutor the users, I would say. And as far as Gen Z is concerned, it's really that shift from digital adopters to digital natives. That's the way we look at it. And being a digital native means that you expect the device to do everything that you need to do to fulfill your desires and needs. So we take a very hard look at what capabilities are available across channels and certainly in digital. I'm very excited about it because a lot of the work that I've done over my career was implementing initially a lot of those capabilities. And sometimes you implement those things and then the take up is only 10 or 15 or 20%. And you're like, man, this is so great. There's so much more to it. So I can't wait until the next generation dives in and sees this as the only way and the best way to interact with us.
The whole pivoting to working from home in a matter of just 2 or 3 weeks, and most financial institutions being able to do that successfully. I'm sure there's a lot of scrambling behind the scenes that maybe consumers didn't see, but most of them have made that transition quite effectively. It leads me to think that they believe that not only do they need to meet these new consumer expectations, but that they actually can do so much faster than they might have thought otherwise.
Absolutely. I think that this has taught us that we're very capable of operating differently and adapting quickly. You can imagine being a financial institution, we've done a lot of work to ensure that team members can remain productive and that their equipment is operating at a level that supports them. And frankly, we're more productive now than we've ever been. To a certain extent, that worries me because work-life balance has kind of gone out the window, and that barrier that you may have had between home life and work life and family and everything. I think everyone's still trying to figure that out. But the fact that we've demonstrated that we can, while navigating an unprecedented environment from a volume perspective. I mean, this is the biggest refi boom in the history of the United States. And we moved, in our case, we had less than 5% of our workforce working remotely. And now we have 96% working remotely. And that happened over the course of 3 to 4 weeks, as you said. So it really does exhibit that the sky's the limit. And I think, working with Blend last year, we weren't even under that kind of a gun, but we still went live in 3 months for a pilot and then 4 more months nationally. So it shows that these transformations can be made, and they can be made effectively and responsibly, but also quickly in this new era of cloud computing and certainly, all the capabilities that consumers and our team members have at home. It definitely makes us a lot more adaptable and a lot more capable of transforming the business based on consumer demand or environmental needs.
Yeah, it's going to be really fascinating to see what happens with some of the adjustments that have been made in the mortgage business in particular during the pandemic. I mean, I'd like to think it's going to become more permanent because consumers are going to say, this makes all the sense in the world. There's no reason why we should ever have to go to some title agency and sign a whole bunch of paper with a pen without even having had a chance to read it beforehand, versus sitting on their couch in their pajamas at midnight and closing that way. So I think consumers will demand it, but I also think that financial services companies will demand it as well, because it allows them to serve the consumer better, it allows them to save a lot of expense, it reduces operational challenges. I mean, something like some immense percentage of closings actually have errors in them because people are physically signing documents. You can't close out of a digital closing without having signed everything where you're supposed to. It just makes it a better experience. It's not only better in terms of how the consumer feels about it, but it's actually a more complete, effective, and operationally successful experience for the institution.
I think this time period, while it's been really challenging and very frustrating and very overwhelming and incredibly sad at times, I do believe that we're having significant breakdowns for major breakthroughs. And these breakthroughs are demanding for us to get smarter with how we can seek these better solutions from the employee standpoint and from the consumer standpoint. So I think it's going to be, an interesting challenge to see how we, come out on the other side. And even just talking about, will brick and mortar branches actually exist post this era? Of course they will. Just because millennials and Gen Zers are tech obsessed and, mobile first, we still crave human connection and we still crave social experiences. I think that those branches are just going to evolve, and that brick and mortar space is now going to become more of a co-working space and a little retail area and a cafe over there, and then you can go do your mobile banking over there, your in-person banking over there. But we're going to start to reevaluate everything. We're going to break things down to build them back together, thanks to being met with these challenges where we have to. But now is the time where all of us should be evaluating how we can work smarter, not harder, for better solutions moving forward, right, for the consumer and also the institution.
It's a great time for reimagination. Well, everyone, this has been a fantastic conversation. Thank you for all the insights you, Chelsea, and you, Randy, have shared with us and with our audience. We really appreciate it. So, everyone, I hope you'll sign on to another episode of the Benchmark powered by Blend at a future date. But thank you very much, Randy and Chelsea, and hope everyone is safe and well. Take care.